Hello, you filthy animals. I'm your host, Baloo the Bear, and this is the Crypto Jungle, your source for no-nonsense crypto fundamental and technical analysis. If you're new here, we study the Wyckoff method. We give free, no-hyped crypto analysis based on accumulation and distribution, and a little bit of fundamentals when the fundamentals apply. In today's video, I want to take a look at Bitcoin and traditional finance. We're seeing a little bit of a divergence between traditional finance and the crypto markets. We'll take a look at some other altcoins as well. But without any further ado, let's go and take a look at the king of all crypto, and that is Bitcoin. So taking a look at Bitcoin on the daily, we'll just do the short-term analysis for now. We have been battling with this area up here. We tried to get above once, twice, failed to hold. We are holding above this 200-week moving average and bouncing currently off of that, but we are coming in for a bearish test underneath the bottom side of this bearish wedge, this bearish this bear flag formation, this continuation pattern. So we are watching for a potential rejection in that area, but you know, we definitely can potentially break out here. Definitely potentially we can break out here and get up to the 30k zone. Now I'm not counting on that. I really think that there's a serious lack of momentum. There's a lack of demand, and we're seeing demand come into the global markets, but that demand is not coming into cryptocurrency. We can make a quick comparison here. Actually, you know what? Let me just go. I'm going to dive right into what am I waiting for? What am I looking for? What is it that I need to see for me to be bullish? So let's just go on to the weekly chart. Let's go to logarithmic and auto, and let's just take a look at the past. Let's take a look at what has happened in the past. And yeah, we don't need to reinvent the wheel. We don't need to get too out there with our analysis. We can see some common patterns that honestly appear in all markets, in all markets. So we've a little bit of context here. We've been in a pretty large and severe downtrend. Now, whenever you're trying to prove a macro support level, you need to test that level multiple times. When you're in a macro downtrend, meaning you're printing lower highs and lower lows, the only way that you can break that downtrend is by testing the lower levels multiple times, either with a double bottom or a triple bottom, an inverse head and shoulders, whatever the case may be. You're looking for that trend change. And we've seen it in the past, so we don't need to look too far. We can see blow off top, conclusion of the downtrend, retest of the level. Okay, blow off top, conclusion of the downtrend, retest of the level. It always comes back down and retests these key levels of support, and it proves that that support level is valid. Where we are right now, we didn't get a blow off top, we got a double top, and we're just on our swing low. So as it stands right now, there's nothing even saying that we have our low. We haven't even proven to the market that we have our low yet. And you're not going to prove your low until you get a secondary test of that same low. So I'm definitely waiting. When you're in a bull market, you need to think quick, you need to move fast, you need to have a plan and put that plan into action very quickly, because there's a lot of market participation and there's a lot of people marking up the price in a very fast way. When you're in a bear market, that's gone. Everything moves slow. And you need to adapt to that, and you need to understand that you have the ability to move slow too. So that's kind of what I'm looking for. I want to see some sort of market recovery. I want to see some sort of rally. You know, this one was rather weak, but it still had a little bit of a rally. This was a very large rally, which we may or may not even get on this time around, because when we do compare to traditional finance, there's a serious lack of demand here overall. But ultimately, when we do find a floor, whenever we find our seller's climax, we have a tentative one right now, I want to see us come back down and test that level. That secondary test, that second capitulation, that second event where people give up and get really scared and a ton of panic comes back into the market. We just had it here. A lot of people got very scared. We had our capitulation event here. So we got capitulation number 1. Once we get capitulation number 2, that's when I'm going to start looking to gain a position here. So you can see we hit a floor kind of in a capitulation 1, capitulation 2, bull market. Capitulation 1, capitulation 2, bull market. Capitulation 1, capitulation 2, bull market. So that's kind of what I'm after. And it can take longer. We could get multiple tests, but I don't think that we're not going to get any tests. So a lot of people think that, because of the bullish fundamentals of potentially what's going on with the Ethereum merge, there's a lot of speculation that we can, kick off the bull market all over again. I'm a little more bearish with that on the macro analysis, both of what's going on with cryptocurrency and just what's going on in the global economy and how the fundamentals of money are changing and not for the better. Yeah, there's a really big expectation for the ETH merge to ETH 2.0 to really carry the market forwards and cause another bull market. And I'm just pretty skeptical with that. So before we move into the comparative analysis of the NASDAQ versus Bitcoin, let's just see who we got in the chat here. Leslie McDonald, good morning from the UK. Dan Simmons, good morning. Patty, good afternoon. Yeah, if you guys want me to take a look at any specific projects or specific indexes, stocks alike, leave the tickers in the chat. And I want to just quickly take a look at the NASDAQ comparative. So let's pull up Bitcoin. Let's go turn logarithmic off, auto on, and let's do the last 6 months. Pull that back a bit. We don't need the RSI. And we'll do the same for the NASDAQ, last 6 months. Pull that back a bit. And make some observations here. So first of all, we had a leg down, consolidation, another leg down. In the NASDAQ, we had a leg down, consolidation. So we didn't get another leg down in the NASDAQ. That's showing comparative strength against Bitcoin. Now Bitcoin is in a bear flag formation, getting ready for, potential breakout into the low 30s. And the NASDAQ is really breaking out and getting close to its previous local high, definitely above the area of correlation on the NASDAQ. That would equate to, on Bitcoin, that would equate to around the $45,000 where we had our previous breakdown of the bear flag back here, to get the same comparative of the NASDAQ. So what this means is there are market participants who are speculating bullish and they are willing to go long, but they're not willing to do so in the context of cryptocurrency. Cryptocurrency is a very speculative market. There are, most people who buy crypto have no idea what they're even buying, and smart, savvy investors aren't really looking to purchase it because they understand that the risks are so high with such a speculative market. So we're seeing this as a comparative analysis where, the stock market is rallying and Bitcoin's doing nothing. We need to be honest with ourselves and understand that that's a pretty important analog to make note of, because what it's saying is, we don't have the demand that a lot of people think that we do. And if we don't have demand, you're just not going to get a bull market, period. End of story. So the other thing to make note of, shout out to Jen in the Discord. If you guys aren't in the Discord, what are you waiting for? Links below. We'll go to the weekly chart for this, and we'll take a look at the resistance that we have on Bitcoin in relation to the RSI. So this whole top formation, this whole distribution formation, the whole distribution, it has been underneath this trend line on the RSI. So we do need to break above this RSI line before we can get too excited. So I want to see something where we get above the line, test the line, and hold the line. All of this is going to take a really long time. This is on the weekly chart. So I'm certainly not expecting anything super bullish this month. Potentially, maybe midway through next month, we get some sort of bullish price action, get some sort of breakout that could lead to further price action where we could close out the year potentially with a rally. And then ultimately, I think that rally will fail going into the new year, going into 2023. But yeah, there's just a lot of things that are holding us back. And when you're in a market of low demand, that's not helpful. That's really not great. So, we got a lot standing in our way. Even the last rally didn't even make it up to the RSI line, and this one's curling over. The good news is you're in the value zone. So this is more for the long-term hodlers, the long-term investors, those who are looking to position trade crypto, going 5-year time horizon type deal. You're in the area where you're at a discount. If you start DCAing now and DCA for the next 2 to 3 years, you're going to have a good position with good prices. We could go up, we could go down, but ultimately you're in the zone where there's a lot of value moving forwards into the next cycle, where we're going to likely get above and beyond $100,000 Bitcoin. So with that long-term time horizon, not trading on an exchange, not using leverage, and not using a stop loss, just that hodl position, remove it from the exchange, put it on a leisure type position, you're in a good spot. But ultimately, I don't see us getting out of here anytime soon. I think that we have many months ahead of us, and that's just for the potential for a bear market rally. As far as my analysis is concerned, I'm just watching for that bear market rally, and the bull market transition I still maintain will happen. We'll start to get hints of the bear market transition into a bull market in about 18 months is what I would anticipate. So definitely something to look out for in terms of the halving narrative that does affect the crypto market. But yeah. Let's take a look at Ethereum. Ethereum is leading comparatively to Bitcoin. But as you can see, we are in this distributional structure here, UTAD, LPSY. And now we're coming in for our bearish test, LPSY. And a lot of people are just really bullish on ETH. A lot of people have really high expectations for Ethereum and the ETH merge. And from a technical point of view, I simply just don't see it. From a technical point of view, I would like to see Ethereum below 1,000, potentially even below $500. LA to Max, welcome. Catching a live stream. Yeah, this is the regular time for the Friday show, and then we also have the Monday show at a different time. Trying to catch more of the European crowd with this one. So yeah, Ethereum, it's right in the area of a rejection. If we can get on top of that, then maybe I need to change my analysis. So, if we do get something like this, then potentially we can get a rally up to this level of resistance, but currently we're below it. We have a bearish divergence. It's looking like the volume is petering off, so it'll probably more than likely be the area of a rejection. Percentage-wise, how large is your long-term hodl of ETH and BTC to what you sell/trade during the bull market? A long-term hodl of ETH is pretty low. And long-term hodl of BTC is probably, 5% of my net worth for long-term hodl, but it will have to define hodl, because I have BTC that's I'm not planning on selling this cycle. I'm not planning on selling next cycle. I actually anticipate that one day that Bitcoin will actually become worthless for a short period of time, in the event of, kind of more aggressive attacks on Bitcoin from governments, because I don't think that the governments have actually attacked. So if we're talking cycle to cycle positions, I've got nothing. If we're talking cycle to cycle positions, I've got nothing. And what I will say, just as a general rule, you should never have more than 10% of your net worth in any given trade, and you should never have 20% of your net worth in any given sector. So when you look at your net worth and you want to invest in crypto, everything that you do in cryptocurrency, in the cryptocurrency sector, should not account for more than 20%. And if you are in specific trades, you don't want to exceed 10% for the specific trade in that specific sector. So, a responsible way to kind of get a position, if you were doing like a long-term position trade, would be 50% Bitcoin, 50% altcoins when the time is appropriate and when the bull market is showing you that there's potential for that to be a good idea, of which I just don't see just yet. But yeah, it's a personalized question that's going to be unique for every single person. I will also say, as just advice for everybody when talking to other people who aren't convinced in buying Bitcoin, when you're talking to your friends and family, they're just like, I don't get it, whatever, I don't care, how, or they come to you, how much should you buy? I often say to them, there's nothing irresponsible with a 1% allocation of Bitcoin. So to those people, just 1% of your net worth, 1%, maybe 2% if you're a little bit more bullish, but 1 or 2% of your net worth in Bitcoin, you're not going to sweat over that. It's a very small allocation. It's a very small representation of your net worth, and the asymmetry in the event of Bitcoin actually taking on, that 1% could one day potentially equal 90% of your net worth in the context of Bitcoin adoption. So it's a pretty responsible, it's kind of a different way to talk about how much crypto, these no coiners or friends or family should buy. I just always say, there's nothing irresponsible about a 1% allocation, and it's something that you just learn how to hold it and then put it away. Actually made a live stream at 3:30 a.m. Appreciate your streams. Man, go to bed. Go to bed. The market's not moving yet. That's the synopsis of the stream here. Let's take a look at Cardano. Let's turn on alpha numerics. Let's go to the weekly. Yeah, I just started playing Axie Origins on a side note. You just reminded me of that, Just Tree. I like the design. I think that, for all the Axie people out there, it's going to be a big adjustment because the game is completely different. Let's actually take a look at AXS. Let's take a look at AXS and SLP. Just played the game because I know that we're getting ready to transition the SLP over to the new game, Axie Origins. And there's potentially some more burn in there. More characteristics that can burn the tokens. AXS, showing a potential floor, but certainly not breaking any structure, so the trend can continue. But yeah, I do like the way that the game is set up. I think that it is forcing players to be a lot more strategic, and I think it's giving a lot more strength to traditionally less strong axes. The team dynamics is very different, and the combos and how people are going to play is also very different. Which I don't know if people are going to like it or not. Because there's also now just an increased element of chance, which I don't know how the community is going to respond to that. You know, if you're a top level player who is on the leaderboard consistently, and now there's a big factor in your gameplay that is affected by chance, then it kind of turns more into a casino, and that's going to attract a very different crowd, and it's not going to be the AAA gamers. Not that Axie's a AAA game, but you know, it's going to be very different. So SLP also looking like absolute shit, looking like garbage, but who knows, if we can get a burn mechanism with the new game, then that can certainly change in a hurry. Let's take a look. We didn't finish our thoughts on Cardano. Cardano's just barely holding on to the 70 MA on the weekly, so certainly very weak. Algorand, don't even know why I have this one on here. Oh, this is the wrong list. Let's go to Shitcoin Bingo. Let's take a look at Ape. Ape actually doing not too bad. Not taking a position, not interested in a position in Ape, but it's one of the stronger ones that we've looked at thus far. Kronos looks like shit, getting rejection. Doge, poor form. Shiba, mildly better form. Solana just had a bunch of negative press. A lot of people lost a lot of money, I guess. Too bad for them. So sad. You know, I'm so calloused. I'm so calloused. If you lost money with the Phantom wallet, I am sorry. It's just the market, man. Nothing like kicking you when you're down. You know, the market's down and then boom, you get hacked right at the bottom. That's pretty brutal. So sorry, but I will say that these types of events create scars, and the scars protect you moving forwards. Not to say that anybody was dumb. Nobody was dumb. It's just, we're in the Wild West. Crypto is the Wild West. People get away with ridiculous things in crypto. So nobody was stupid. Nobody did anything wrong. The only thing that happened is crypto is just shit sometimes. And a lot of people lost a lot of money on the hack. So heart goes out to anybody who was affected. But honestly, it will help you make better decisions in the future, and it won't happen to you again. On the weekly, looks like shit. Theta, getting a rejection. VeChain's actually not looking too terrible. Not looking to buy, but not looking too terrible. XRP, meh. Zilliqua, getting into the rejection zone here under the 200. And then two other ones that I've been just keeping an eye on is Looks Rare. This is an accumulation play for me. Oh, is it gonna load? Is it gonna load? Doesn't seem to want to load. Freezing up. All right, well, it was GMX and Looks Rare. Those are ones to kind of keep an eye on, but it's long term. You looking at Theta? I mean, yeah, but I don't care about it. I mean, Theta, yeah, it's just they're all in the same position, really. So they're some are above the 70 MA, most are below the 70 MA. Potential for a rally up to $2 and some change, but I wouldn't hold my breath, and I certainly wouldn't be taking a position. It's going to go into a longer term accumulation as far as I'm concerned. Can you look at Mara stock? Mara. Marathon? Is this correct? Oof, ugly. It's had multiple kind of pump and dump cycles. I don't know what this is. Is this just a VC bullshit? Yeah, this is a very strange chart. Yeah, I would potentially be a buyer at 14 cents. $2. Oh, 14 cents. That's too aggressive. Let's say $2.50 would be a good place to accumulate. This might rally up to about $20 and get a rejection, but ultimately I think we head back down to below $3. I think $3 is a good area to start accumulating this one. Do you do intraday? I do when there's intraday trades to be had. Right now the market is it's really low volume, and low volume for me equals low conviction. So when the market's really low volume, you don't get price movements that go quick enough to be in a profitable trade when the market starts shifting. And we're having a positive shift in traditional finance. We can see that in the NASDAQ. NASDAQ's performing, and that's not translating to crypto. So the demand in cryptocurrency is very, very low, which means that the odds of you being wrong on your analysis are very, very high. So yes, I do intraday trades, but you also have to time periods of the market and time phases of the market and we identify these phases using the Wyckoff method. So we're in very early phase A of Bitcoin. And I just, there's no advantages. I'm not trying to scalp out 10% here, 20% there. I want the big moves. I want this, these moves. So that means I don't trade a lot of the time. So, these are the moves I'm after. Not this chop. Don't care about the chop. I think we're down here. I have no interest, no profit trying to chop down here. But if we get a break out of the consolidation, maybe up to 50, 55, but I haven't seen any signals or signs that that is going to be the case. I think that there's a potential that we finish off the year bullish, but I also think that there's a few months ahead of just nothing. And I don't trade chop. I don't trade nothing. So no, not much as far as intraday analysis right now. Yeah, it is a BTC stock. Yeah, it looks like shit. Looks like shit. And this is just going again to the narrative that nobody cares about crypto. It's too speculative, and we're not in the market of the demand for high risk speculation globally. There's just not a lot of demand. If people are going to deploy capital in this market, they're going to take safer bets, and crypto is not a safer bet as far as speculators are concerned. Long-term horizon, I think there is no better sector to be exposed to in the long term, but I'm also waiting. I think that we have some time ahead of us. What do I think of silver? Let's take a look. I don't trade silver myself. I don't see, for me, precious metals. Are something that I would hold in person. Like I would actually custody them myself. And if I was to do that, I would choose gold, because I don't want to have to bother holding silver. It would take up a fucking safe in no time. It's too cheap. It's $20 an ounce. I'm not going to go through all the trouble of holding silver for $20 an ounce. If I was to be in precious metals, I would be in gold. As far as this move right here, it's not great. It's kind of a pretty yucky move. Let's turn off alphanumerics. We did have a nice accumulation here, I will say that. So let's look at this through a bullish lens, just because there is a possibility that this rallies. Let's actually go solid lines. Let's make it orange. And we did bounce off of the area of interest here. So again, we'll show you the Wyckoff events. So we have our seller's climax, our automatic rally and our secondary test. That's phase A. Little bit of an overthrow, up thrust. A nice tightening of the spread. We held for another secondary test in phase B. So that's good. Got a rally rejection. It's quite volatile, if I'm being honest. And then we had a big move, kind of a gross spring, if it does ends up being a spring. So we've got the spring move here, and now we're in some sort of choppy consolidation. So I would want to see it kind of calm down and hold support at this new level. If we can hold support here, that's a positive sign. But again, it's going to take a few months. So maybe we rally up to the top of the channel, we come back down, tightening of the spread during this backup phase. If we get a successful test, if it holds, then you have the potential for a rally. But I'm not buying paper silver. I'm not buying physical silver. It's just not for me. Yeah, sign of strength potential. Yeah, this is definitely a sign of strength coming off of a spring. So you do have your SOS there. Just a really big backup phase. It's basically formed a distribution for its backup phase. We had a distribution, so maybe a rally up to there, and then another accumulation as the backup. So you're looking at months, and this is on the weekly chart. So realistically, you could be looking at maybe even a year. Well, let's take a look at gold. We did silver. Let's look at gold. Gold. See, gold is just so much stronger than silver. There's more demand for gold. Now, what are we looking at for an accumulation? So gold, I don't like the structure that it's formed here. And it could definitely have the potential to come back down like this. If this is the sign of strength move, then, you know, we're looking at getting that LPS right around this area, come back down for our backup phase, form a little mini accumulation before a rally. So what does that hint towards? What does that mean on the macro scale? I do think that there is a potential for a short-term rally in equities. When we take a look at the NASDAQ, you know, we're showing strength. We're reclaiming levels. That's a positive sign. When we take a look at the S&P, we bounced off of the area of support that I have been talking about for months. You know, we talked about the mean of the channel. This is where you expect to see a bounce, and this is exactly where we're proving a bounce. So potentially we rally. If we rally, you're going to see silver, gold, crypto. Crypto is just going to take any opportunity to take a leg down in the context of a bear market, but you're going to see gold and silver react a little bit and then maybe go into a period of accumulation while we form a topping formation on the S&P. So maybe we get a double top formation, something like that, and then we get the capitulation down to the lower end of the channel. This is where real fear comes into the market. So be on the lookout for that. Thanks for the sub, whoever. I missed the tag on the sub there. But thank you for subbing or subscribing. What do you think of seasonal tendencies? It's kind of a traditional market narrative. I think that you can get macro moves in about, you know, quarter to quarter. You can get big moves. You can also get the beginnings and ends of macro rallies and reactions within 60-day time frames. Then there's the whole sell in May and go away narrative that comes from traditional finance and equities. So yeah, you know, there's some narratives, but ultimately I try to simplify my analysis a lot and just observe what's happening right now and make analysis, determine what I'm looking at right now, and make decisions based upon that. So, you know, I'm not like thinking, oh, we're bearish now, but you know, next season at this dates, this happens and that happens. Like, I really don't focus on the news a lot because I find that it clouds my judgment and will create a bias. And the only bias that I want to create is a bias that I create myself. If I collect a bias from another trader, it affects my trading. So, you know, I want to just take out all the bullshit, all the narratives, all the fluff, and just look at the candles. What are the candles saying? They're painting a picture. What is the picture it's painting? Heard someone talk about a 44-year banking cycle. What do you think? There are these generational cycles. So there's 20-year cycles, 50-year cycles. So that could be a 44-year banking cycle. And then there's 80-year cycles as well. And we're kind of at an interesting point because a lot of those cycles are lining up together. We're concluding an 80-year cycle. So that's what, the 1960s. So what happened in the 1960s? Oh, we don't have enough data. We don't have enough data. Well, whatever happened in the 60s was the beginning of a cycle, and that could be the beginning of you know, the fractional reserve debt-based system of the US. I don't know, just speculating now. Don't have a chart. It doesn't go far enough back. But yeah, you know, these macro cycles do happen, and a lot of them have to do with just the pain points of running a fractional reserve financial system. And then a lot of it also just has to do with generational points of view. You know, every generation kind of has a different point of view on the world, and they push boundaries in the direction that they want to be pushing boundaries. So you kind of get changes to the social consensus of humanity every 20 years. And when you couple that up with decisions of financial policy, monetary policy that went back, you know, several decades, there can be a conflict because there's a disconnect between the reasons that those monetary policies were put in place a certain way, and over time we keep changing the policy, running up to a position of potential collapse where now we're just like, oh, well, that's why they did it that way back 80 years ago. I get it now. Why don't we do the same thing? And then the cycle starts all over again. All right, that is all the time I got for today. So pretty good engagement here. Nice to see people in the chat. Nice to see people watching on Twitch and watching on YouTube as well. You guys are the bear market survivors. You are the jungle dwellers, the animals of last resort here. And kudos. I think, you know, I'm not calling for the end of the bear market just yet. But if you're still a participant now, you're going to be the beneficiaries of the bull market moving forwards. So thank you all for joining in. Don't forget to like and subscribe. If you enjoyed this content, you know, share it with somebody that you think would find that you think it would help. And yeah, trade safe. It is a jungle out there. Peace.